Let's analyze those numbers a little more. The numbers are completely in line with what our own estimates were. We have Ankit Merchant to analyze the numbers for us. Ankit, how are you analyzing these numbers? In line is what our estimates show. What's your own thoughts on the internals?
Yeah, I think numbers are pretty much in line as per our expectations also. In fact, the bottom line has come in just as what we were expecting. I just need to dive into more about related to their margins as such. So that is one particular factor which I'm looking forward for. If the margins are above 16%, I think the street will definitely like it. So that's one point to consider. I think margins have stood at close to 17.6%. So as per my calculation, I think that looks very good on the face of it.
In fact, Mitul Shah is also joining us to analyze the numbers. Mitul, what's your own thought? The way margins have come in closer to 18%, some improvement in margins. Do you think there have been price hikes as well? It's all adding up now, profitability improving for the sector, especially after the corporate tax rate cuts?
Basically, EBITDA margin has improved close to 200 basis YoY, as you rightly pointed out, nearly around 17.7%, which is a very strong performance, and it has nothing to do with the tax cut. So certainly it is at operational level. We believe two prime factors behind this, that export contribution was sizable in this quarter. It has improved YoY as well as sequentially, because domestic has declined by around 15% and export reported growth. And second factor is the decline in the three-wheeler overall was much lower compared to two-wheeler. So these two factors has reported into higher revenue, average realization as well as margin. We have to notice that currency was also quite favorable this time, and export being higher at a higher exchange rate, this also translated into bottom line for the company.
Karunya is also here. Karunya looks at the space very closely. Karunya, what are your own take on the number?
Ajay, the first thing is that exports business has been able to cushion them very, very well this time around, because domestic market, as a matter of fact, we all know how weak it was for the two-wheeler space, whether it's motorcycles or scooters. It's firstly the three-wheelers which have done very well, while yes, it's a very small number in terms of volumes, but exports, well, they've seen their highest ever sales of nearly 5.7 lakh units in the quarter gone by. So that, and of course we saw that the INR depreciation was also able to work in their favor when it comes to the export business. So volume share as well as the INR benefit, depreciation benefit, is something that has cushioned them very well. The margins performance has been very smart, almost 18%. They haven't delivered this kind of margins in quite some time. They have been hovering around those 15 to 16% range for quite some time now, and this is a company who used to, as a norm, clock in over 20% margins. So I would say it's a good set of numbers. No disappointments, nothing to complain about. But the big question remains is whether this trajectory for exports and this kind of benefit is something they can see going forward as well. Q4, yes, perhaps they can sustain it, but going into FY21, how will it play out? Because two-wheeler pickup has still not started really taking over. BS6 is something that the market is still digesting. So we don't know how the pickup will be for two-wheelers. So that's still under question. Let's see how it plays out. But on back of exports and three-wheelers, which is also the CV segment for them, has done well.